Joining me now is Michael Lasser, equity research analyst at UBS, covering the food retail space. Michael, how do they keep doing it, and why can't other chains match prices, or does it just not matter so much for them?
Well, Kelly, 20% of all grocery sales in the United States go through Walmart in one way, shape, or form. So it has unmatched scale in this category that it uses to generate purchasing leverage in all of the areas that it buys. And then it hands over those savings to the consumer in the form of lower prices. So it's a phenomenal model that has been working well for a long time. And now it's turbocharging that by adding other elements to its business model, like advertising, third-party marketplace fees, membership fees. And this is providing further opportunity for Walmart to invest in areas like price and further enhance the customer experience.
Based on your study, you said a customer living in the Denver area, that's where my sister is, so we'll pretend it's her, spending $1,000 on groceries in Walmart in October would have generated $100 of savings compared with Target, and $200 versus Amazon. Now, did you go to the likes of Aldi and Lidl? Because that's where it also seems like there might be maybe Dollar General, some more peer-to-peer competition for Walmart.
Well, in those cases, in the hard discount model, those are typically unbranded goods, more like private label products, and a much more narrow assortment versus Walmart. So Walmart's not only providing a lot of the day-to-day products that consumers use regularly in their lives, but also at very compelling prices. If you want to get unbranded goods, private label products, as a consumer, you can go and shop at one of those hard discount chains. But for dollar value, right now, Walmart is amongst the leading players in retail.
Based on how well they're executing, do you want to see them go further down the path of becoming an Amazon competitor, or would you prefer that they stick with what works?
They are going to stick with what works. They're going to enhance the business model over time. And that's going to make Walmart an even more formidable competitor to the likes of Amazon and others in the marketplace. But its core business of selling inexpensive goods at a very good value to consumers is not going away. It's just going to enhance that with other revenue streams, expanding its assortment online, and it's going to make it even an already good value proposition to the consumer an even better value proposition.
What do you think would have happened if Kroger and Albertsons went through?
Well, in retail, it is a game of scale. So having scale is important. But I would tell you that retail is a very competitive sector. Day to day, all of these players, whether it's Walmart, Amazon, Target, Costco, and others, they're trying to take market share from other players in the market. So that's not going to change no matter if there's more consolidation or less consolidation in the market.
All right. Michael, as we leave it, how do you think this all kind of informs us about where the consumer is going into the holiday season and going into 2025? The labor market's held up a little better than expected. Inflation is still a top level concern. Where do we stand?
The consumer overall, Kelly, is steady but choosy. And I think that what we're going to see over the next couple of months is that the consumer is going to focus his and her spend on value-oriented items at a select number of retailers. Anywhere between 40 and 60% of all incremental retail sales growth right now is being driven by a combination of Walmart, Costco, and Amazon. And that is likely to continue for the foreseeable future.